Today we'll be going over a key indicator that is the evolution of wave volume because it contains trend. And because it contains trend, it can at many times show a shift in trend as well as a reversal. And can also help confirm price and sometimes lead price. First, we'll be going over the indicator. And then second, we'll be going over what's called high volume reversals. All right, this is because everybody knows what a high volume breakout is, but this is what's missing: high volume reversal. Why? Because in a high volume breakout, you're basically buying high. You're buying the most expensive price, and you have a lot to risk. But in a high volume reversal, you're buying early at discount. Whereas high volume breakout, you're basically buying at the highest price, the worst possible price. Anyway, so we'll be going over these two things. First, let's talk about the indicator. So the indicator is an evolution of wave volume. And what we know about wave volume, or Weiss wave, is that it's basically a summation of volume on up waves and down waves, right? So you have up waves and you have down waves. Now, what wave volume does is that it gives you the volume on the up wave and the volume on the down wave, but the next step to that is actually connecting them so they make a trend. Meaning you take the up waves and you add the down waves and you get wave vol trend. This I found very useful because once you have the trend, you can very easily see a break, which is the reversal. You can also see if those supports that they're making, the volume made is holding. You can also see the confirmation of the wave volume with the price. So it's very, in my opinion, it's really, really important. I'll show you examples of how effective this is. Alright, so first thing is, this is the daily chart, and this is the wave volume trend. The way you do this is surprisingly simple. Alright? It's surprisingly simple because you already have the base for this, which is on balance volume. Once you have on balance volume, which is the summation of volume, you can then add a zigzag on it. Once you have a zigzag on it, you will automatically have a trend with highs and lows and higher highs and higher lows, and you'll be able to see big waves and little waves just like you would on wave volume. The key is just putting zigzag on balance volume and having the zigzags labeled so you can see that when you have, say, on balance volume going up and down, you can have these zigzags on it, right? And they'll kind of tell you the strength of the buying and the selling. All right? So it's very, very, on balance volume is good, but if you don't put a zigzag on it, you can't figure out like the strength of the buying versus the selling. You can't quantify the strength of the buying versus the selling, and therefore can't make further judgments, because further judgments require quantification of the up waves and the down waves. Anyway, so I'll give you an example of how important this thing is. So this is the top of the E-mini right here. Okay, before we had the down move, this is the top. So we have this top over here, and what happens with the volume is it's not moving sideways like price. It's already preceded price, which is the whole point of volume. Because volume, one of its features is that it can precede price, meaning it can move prior to price. But in order for you to clearly see that, you have to structure it. You have to structure it. And the structure, or the mechanism to structure that data, that volume data, is the zigzags. Why? Because they show you trend. Zigzags show you trend. So you see this is going sideways. Does this look like it's going sideways here? While price was moving sideways, this already broke with multiple lower highs and lower lows. So this already downtrended, and you can see that it breaks the average line, moving average line, and never reclaims it. And what I mean by that is like completely breaks it. Completely breaks, not like a little tip. It just, more distance is below the line than above it. Again, more distance is below the line than above it. Here, more distance is above the line than below it, more distance above the line than below it. Here it's a little problem, but here it's very clear. Right? So, the low high, low low, and all of that, even the highs are below the line. So it's game over. Alright, so this shows you that volume in this case, in this turning point, preceded price. Again, volume preceded price. Where is the change of behavior? It's always the highest number. So you just go here and it's right here. That 63, which was here somewhere. That's your change of behavior. Some may say it's the 60 as well. And we had that number before, but this one is a lower high, lower low with 60. So you could say, yes, that's possible, but this for sure is. And also, you want to look at the pullback. The pullback volume is half or less. Pullback volume is half or less. So supply is twice as strong as demand, and the trend broke. All right, and then what happens as it goes here, 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 here? We're always watching for the biggest number, right? Because the biggest number is what you need to keep in mind, because the change of behavior will break the biggest number, or will be the biggest number. What's the biggest number? As it goes down, we have this number 40, but the number 40 after that, does it have a low volume pullback or high volume pullback? 51. So selling is still in control. After that, so the next number that we're looking for is bigger than, it needs to be bigger than 40. At least 40 or bigger. And there it is. 58. Bigger than 40 and has climactic action underneath it, which is the biggest number in all of the waves, all of the down waves. So that's your climax and your automatic rally or sign of strength. We have climactic action here and buying activity here. This is your change of behavior. But are you certain? No. Because in this case, you had a strong big number, but it was then followed by a bigger number on the downside that broke its low, right? That's not a secondary test. And with the number preceding that was not a climax, because the highest number is 63, so it has to be 63 or more. So we look for the highest numbers. Again, the highest numbers. 63 is broken by 67, which is bigger than 63, so this is their new potential climax. 58 is your new potential change of behavior, and this is a very pathetic test. Like, forget about it. And then it goes up. This goes up. The easiest way to do this is just to keep the, if you just focus on a change of behavior, look for the biggest numbers, and then a low volume pullback. Just look at the highest number followed by low volume pullback. So when it's going down, you have 40, but is this a low volume pullback? No. Is this a low volume pullback? Yes. Bigger? Yes. Bigger than 40? Yes. What is it? 58. Bang. Right? All right. So this is, in my opinion, the evolution of wave volume using an old indicator called on balance volume and just putting zigzag on it. You can then turn on balance volume into wave volume trend, which is your wave volume, but in the form of a trending indicator, which will clearly show you breaks in the trend, and you can compare with price. So it's a very interesting find. Very interesting find. See, even on the hourly chart, it gives you warning signals like this market is going down, right here. It's on 3.8, whatever, 42. Right here, it gets picked up, 52, right? So you mark this low, and right here is a little spring of that. You see that it did not break this low, so demand is still there, and it just continues. You see this many times. See this like all over the place. You can clearly see the trend. It doesn't break the low. The low of the up waves, as long as those lows are not broken, demand is basically in control. Here you had a little problem. We got picked up and reestablished support. See the lows of the up waves. That's 95 is strength. This pullback is nothing because the lows are not taken down. Here. Even though the price low is taken out, volume low isn't taken out. Diverging. So it becomes a pretty good indicator. All right, I'm done with this. What was the next thing? All right, the next thing I'm going to cover is called high volume reversals. So you can see the high volume breakouts if you want to buy them or whatever, but I'm interested in high volume reversals. However, volume data really, you cannot do this on the same time frame, meaning if you have a daily or whatever you have, right, you will not be able to see the heavy volume in here most of the time. Most of the time you cannot see. However, you can see the high volume breakout, right? If you have like bar, it'll go like that. So that's your high volume breakout. But the high volume reversal is very, very elusive. On any same time frame, if you look at the green bars here that are going to be reversing, most of the time they don't show the heavy buying activity. Just you cannot figure out why it's not doing that. And so what people do is when the market pulls back, they go to the lower time frame. Funny thing is, on a lower time frame is how you identify high volume at this pivot. So this leg will have something like this here. So that piece of volume is what we're trying to get at. That piece of volume is what we're trying to get at. How to get that piece without even looking at a lower time frame? Yeah, you can look at a lower time frame, great, but I also want to see it on the higher time frame. So how do you identify heavy volume? Well, first step is to get the ratios, meaning let's say this is two times, right? 2 times average up volume. I want to see that when we're at a pullback. I want to see that, okay, price was pulling back, and then all of a sudden at this pivot, you have that, which was 2 times average upwave volume right here at the pivot. That would do the trick. That would solve the problem of high volume reversals. We can get high volume breakouts, but we can't figure out where the hell the high volume reversal is without going to the lower time frame. So is there a way to see the high volume reversal? And the answer is yes. Now you need to be able to pull data from your lower time frames onto your higher time frame. And this is possible, with some platforms. I think many platforms have this. If they don't, using a cheap platform. So you can see here, you're actually able to pull this information from a lower time frame into a higher time frame and show a wave that has double the average up volume or 3 times the average up volume. All right, so I only want to see this on pullbacks. Yes, there, over here you have heavy selling, but I want to buy pullback. I need to know what I want to buy. I want a long or short. So for example, let's just start at the trend. Here we see a rally, now you got a pullback, then this bar here, right, after the pivot, has a wave that is twice as big, twice the size of the average up wave in volume, twice the volume of the average up wave. Twice the up wave volume average. All right, that means it becomes like a signal. Again, you have a rally. I got a pullback. First, I want to see a green bar, and within that green bar, I want to see if there's heavy volume, and it does. But the wave, it ends here in this bar, and it has 3 times average up volume. Then I just put the order at the close of the prior bar, get filled. When it pulls back again, you have here again 3 times average up volume, which means someone's buying it. I'm interested. Here you have it, but it's a little bit late. It's already breaking out. because it was a big wave. And now it's pulled back, pulled back, pulled back. But right here, you have double the average volume in an up wave right here. These are your change of behaviors coming from the lower time frame. I'll show you more. Finally, you have this shit up here, and then go pull back, and then bang, right there. That green bar has a volume wave, which is 3 times the average up volume in here. Passes my threshold. You can't get them all. Like nothing here was detected, nothing here was detected, nothing here was detected until here. Until this. So this is a little bit late. Fine. You can just put it below and see if it get filled or don't. Just wait for the next one. Here, you have reversal, pop on big volume. Here you have a reversal, pop on big volume. Put it on prior bar close or just long. Here you have heavy selling, got to watch out, but it was met with heavy buying if you want in. Long buy because they didn't have any fall through to the downside. Here you have a problem because yes, you have it, right? You have it, and it only gave 1 bar fall through, and all of a sudden they're selling right after it. So this was the first indication that this was in a distribution. Why? Because the buying is meeting selling. When you have buying, you have a whole wave. You have a whole swing. You have a whole swing. But this didn't make a new high. In fact, it got taken out. So that this selling here. And that's the -2. Otherwise, it would have made a higher high. That's fine. It goes, dips below, and then finally it rallies and reestablish. And then I'm waiting right there. Bingo. High volume reversal. Just like a high volume breakout, this is your high volume reversal. I'm also confirming everything with this wave volume trend. Why? Because I want the big numbers to be green. Big number, big number, big number. And I want it to be mostly above the green line. The majority of the wave needs to be above the green line for me to consider it. Why? Because uptrend, it's going to be above the line. The majority of the wave. It can go a little bit like this. Doesn't mean anything. It's just a pullback. But if the majority is below it, then something's off. And it's a big wave. I want to see. Anyway, keeps on going. Here we start having problems because price comes and you have 3, but then buyers fight back. You have 4, and it makes a new high, which is good. After that, sellers are pushing and making new low. This is the first indication of a change of behavior right here from this. Everywhere below, you have bullish change of behavior, bullish, bullish, this is bearish. Why? Because it's breaking supports, volume level supports also, and it's on heavy volumes. So you have to be careful now. They keep fighting, as long as they're fighting, I'm buying the pullback, but eventually it just, here you got a problem. I don't want to take any more longs. I'm not going to take this long because the majority of this wave is below, and you're done. So all of these yellow bars indicate heavy selling, heavy selling, heavy selling, heavy selling, heavy selling. To negative, 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 negative. Okay, until here, where you start getting these green bars. And the last one was right here. Look what happened. Right? So how does this look from a higher time frame to the lower time frame? What's going on? So you will see that this was here. Anyway, somewhere here you have big volumes coming in. Probably this one. And then you just keep looking, and later on the demand comes in here. That's based on price. This one is based off of volume. You can very clearly see the way volume trend shows you, oh yeah, we're in. Smart money is in right there. Right? It's money. That's what volume is. It's money. You buy it. This low's like a support. Pull back. And resume. Right? These waves. It goes red and then bang. Pulls back and then again identifies smart money coming in, and the low is holding. The low of the smart money wave is holding. The low of the smart money wave is holding. The low of the smart money wave is holding. The low right here is the smart money wave is holding. And we're above the line. Anyway, case in point, there's the trend, and I want to be able to see these supply and demands from a lower time frame, like this right here, this supply, right? This is on 2.4, so basically 2, all right? This is the corresponding selling pressure, right, which is 2. And when the wave completes, it's on the next bar, which is now your change of behavior or your supply, which is mapped onto this supply. 2.4, basically 2, because I don't want to see too many decimals, and heavy selling from here. If you go back, you will see from an upthrust there's heavy selling, right? Go back here. It's right there. So price goes up here, and you have a yellow bar with means that right off the pivot you have heavy selling, which is at least 2 times. What is it referring to? It is referring to 2.2 right here, this selling. This selling 2 is this 2 right here. This 2 is this 2.2. What is 2.2? It is basically saying that this wave has more than double the average volume on the down wave. This down wave has 2.2 times the average down volume. Double the volume. That's what it says. Double the volume right at the top. Bang. Double the volume right here. Double the volume right here. Triple the volume right here. So, what's the point of all this? The point of all this is within a trend, we had a major problem, and that problem was we're unable to identify high volume reversals. Meaning the pivot was formed, but how do I know there's high volume reversals? Which are basically your lower time frame change of behaviors. And that problem has been solved. And this one way to do it is by using the wave volume. So if you have a daily, you're looking at the hourly. See that big one right here, which is, say, 3.24 times average, right? So this would be referring to that wave and would now have the value 3, meaning that that reversal has 3 times the average up volume, because we went from the daily chart to the hourly chart and identified that 3.4 and brought it to the daily chart as a line that says 3, indicating heavy buying pressure. That's a very important finding. This is much more, this is based off of Wyckoff and David Weiss's work on change of behaviors. I've added my, whatever I could to it to, with indicators and stuff like that to help. And for me, it's very important to be able to clearly see that, because if I can't quantify it, I can't really do anything with it. It's just a green bar. And I don't want to buy a green bar just because it's a green bar. It means nothing, right? It could have no volume behind it, and at the same time frame doesn't even show that it has high volume. It doesn't show it. What are you going to do? So you have to find this workaround. All right, that's all, folks. Have a good day. Bye.